I am now joined by Mr. Patchamuthu, the outgoing director of the World Bank for Pakistan. Mr. Illangovan has served in Pakistan for almost 5 years at a time period when Pakistani economy moved from one kind of crisis to the other, and World Bank has been a key player helping the government of Pakistan during these periods of transition. I have requested Mr. Illangovan to help me understand the role of the World Bank, especially in the moments of transition. A very warm welcome to you, Mr. Illangovan, on behalf of the viewers of Channel 92, which are not only in Pakistan, but they're across the world. Thank you so much.
Thank you, Mohit, for having me in your interview.
Yes. Mr. Illangovan, you have served here for almost 5 years. How do you see the role of an international institution like World Bank in a country like Pakistan?
So the World Bank Group, which includes the public sector institutions, the International Development Association, and the International Bank for Reconstruction and Development, and our private sector arm, International Finance Corporation, our insurance company agency, Multilateral Investment Guarantee Agency, all work in Pakistan. And our role here is threefold. One is to support the country in its poverty reduction efforts. And therefore, how can we continue to support the country's growth and more inclusive and sustainable growth? And what are the policies, what are the institutions needed, where are the investments needed, and what kind of a capacity is needed in the country. Second, our role is to look at the longer term issues like climate resilience and what can countries do from now to be able to start preparing themselves to cope with future risks. Third is to invest more in people, in human capital, and this is something very critically important for Pakistan, given the historical low human capital outcomes in this country.
So we can take them one by one, but first, what were your impressions when you were coming to Pakistan about the country, and how these impressions have changed?
So I first worked in Pakistan in the 90s, and then I hadn't come back in 20 years.
For how long were you here in the 90s?
I was just coming on and off on visits, spending a couple of weeks on various projects. But then I worked elsewhere in the bank in other parts of the world. And then I came back here in end of 2015, and by which time a lot had changed. And
in what respect?
So most independent observers would say Pakistan is a hard country to work in, live in. This is largely based on probably the politics, the geopolitics. Second is, terrorism had taken root, and there were issues related to that, which, in fact, the World Bank itself, where we had to move out all families, and this became a non-family posting. And third is, given the frequent boom and bust cycle in the economy, the sense was, nothing ever works in Pakistan. So those were the kind of, I would say, not the negative impressions. But then also on the positive side, people say it's a cricket-loving country, and I myself played cricket, so I love the game. So for me, that is something that connects and resonates. Second is, obviously, Pakistan is known for its food and the warmth of its people. And so these are some things, these are some of the other features.
From the economy's perspective, when you came here in 2015, where you saw the country and where you see the country now?
So Pakistan has been going through this every few years, the boom and bust cycle. You boom for a few years and then you start going down, and it hit the bust point. So when I came in 2015, that's when an IMF program was already in place and some of the structural issues were being addressed. And then when we saw the end of the IMF program a year and a half later, Pakistan was posting higher growth rates, around, hit close to around 5%. And then you started seeing again the decline, and when the country entered 2018, another onset of the crisis was there, and which tells me that over the last 20-30 years the fundamental structural issues have not been addressed, and I can point to 2 or 3 of them.
You think it's a long-term issue?
It's a long-term issue, and
many people here, when they appear on television, the economists and the political leaders, they think that Pakistan was doing very well economically, for more than 5% growth rate, and then listening to international institutions like IMF and World Bank that you need to fix this, has actually, like raising the interest rates, high regulatory duties on import, and all these things have actually brought the growth rate down.
So you have two ways in which you can grow. You can invest and grow, or you can consume and grow. So Pakistan's 5% growth rate was largely based on consumption.
Okay.
And if you take the historical investment rates of Pakistan, the private sector, it's hovered around 10%, half of what you see in the rest of South Asia.
Okay.
So if you want to create the kind of jobs you want, and you want to grow at about 5, 6 or even above, you've got to get to an investment rate, both public and private, which is in the 25 to 30%. In the absence of
and
that...
why it hasn't happened in Pakistan from your analysis?
So one is, I think investors look for stability, investors look for predictability, and investors look for also robust decision making. And then Pakistan also has been having chronic power problems, which doesn't give reliability of power supply. Then it has got chronic logistics issue. For example, take the ease of doing business ranking on Pakistan was, kind of hovering around 135 to 145 for a long time. And only more recently, in the last couple of years, the last couple of years, it's risen from 147 to 108, which is a good beginning. Is it sustainable? They have to keep sustaining because you're competing against other global economies. Everybody is reforming. Right. So you got to keep moving. You cannot say I succeeded 1 year and therefore I don't do anything because other countries will overtake. And this is a good indicator. Everybody looks at a country's attractiveness to investments.
Are you then saying that Pakistan's import-driven or consumption-driven economic growth above 5% was not sustainable?
It's given the low investment rates, I think that should be where the focus should be. And you have to have high investment rates, so be able to kind of get to the growth rate. And with the current investment rate, you will only you achieve a growth potential of around 3 to 3.5%. That's the maximum you can do. So this is why you have to keep investing more. If you invest more, you're going to create more jobs. When you create more jobs, you're going to see more people moving out of poverty, and you're also going to see more consumption happening.
So, and in terms of the rupee's value, there's the argument that if Pakistan had depreciated earlier in an optimum time, then things would not have gone from bad to worse.
Yeah, I think it was delayed for a while, and I think there is a school of thinking that to hold the strong rupee has its advantages, but we haven't seen it. And if you really look at exports versus the exchange rate, you clearly see there is a link between the two, where Pakistan has lost its export share over the last so many years when it continued to have a strong local currency.
So, but Pakistan's exports are not very large.
Yeah.
It's mostly dependent on remittances. So, but when the rupee depreciates, the people of Pakistan suffer a lot. How do you look from an economic perspective on that thing? Is the depreciation of rupee good apart from exports? Does it help a country?
No, in a sense, you got to look at what would be the right set of monetary policies that support both the broad economic growth as well as structural reforms and the fiscal policy. You can't look at in isolation of one versus the other. Obviously, in times of economic hardship, as you now see during the COVID times, you got to put in safety net programs so the poor and vulnerable don't get worse off.
You have also been, not only the World Bank, but other monetary institutions have been supporting the programs like BISP and then SARS program. Do you think these programs help the economy?
Yeah, they help a lot because if you're looking at building an inclusive economy, or if you're looking at ways in which you can help the poor and vulnerable with better welfare gains, cash transfer programs with the conditional, unconditional have worked very well globally. And I think these are an important part of, I would say, Pakistan's poverty reduction efforts that have gone on for the last so many decades, so many years. You
mentioned the challenges of the COVID. What role the bank has played in helping Pakistan?
So we have done a few things. First is we quickly mobilized around $40 to $45 million to make it available to provinces and the federal government for urgently needed medical supplies. This was sometime in mid-March. Then in early April, our board approved $200 million fund for pandemic response effectiveness in Pakistan, which supports around $148 million for emergency medical support, around $25 million for cash transfers through SRs, then about $12 million for supporting food rations. So this is what
How do you see the challenges post-pandemic?
I think still the outbreak is happening. I think in my view, everybody's in the same situation. The countries that would come out strongest and quickest from pandemic are the ones who are best reforming, who have the right structural reforms in place. And if Pakistan continues its path of doing structural reforms, I think it can come out of the crisis and bounce back better.
You earlier mentioned that the rate of investment in Pakistan has been low, it should be about 25%. What are the major impediments other than the rate of investment you see in Pakistani development?
The other is, I think, Pakistan has, sort of decades of I would say, regulatory morass that actually has sort of made everything difficult to get decisions done. So I think there's a need to start looking at simplifying regulations. The third is the whole public investment planning also takes a long time. For example, take the World Bank, like from concept to our first disbursement, that means first amounts of money that get disbursed to a project or to people, takes about 20 months. And I think there is scope for further simplification there. Another aspect would be the human resources capacity and skills, which have to continuously be upgraded and be strengthened. And I think Pakistan...
I heard reading you've been talking a lot about human investment, human potential.
Yeah.
What is that?
So human capital, we say, is basically like, both education and health. Like, for example, Pakistan has a very high rate of learning poverty, which is kids at the age of 10 and below cannot read or write. And this you're talking about, that is being a 75%. To me, without the kind of human capital and with high rates of stunting you have, that will affect cognitive skills, which are both needed as Pakistan wants to embrace digitization and move more into the digital space, which is something, again, there is huge opportunity for Pakistan, and especially given that you have a very young and youthful population. This is something...
Are these indices worse than the corresponding indices in developing world now?
On the human capital?
Yes.
Yeah, Pakistan fares poorly when you compare to so many other countries, given it is a middle-income country. It can do more to improve its human capital.
And what about outcomes? The skill development when you have institutions like TEFTA and NVTCC, National Vocational Training? Are you satisfied by? So
I think more can be done. I think there has been good progress made. When I say more can be done, is you got to always look at skills development from a supply and demand side. You can't just build from the supply side alone if the market doesn't have those jobs. So I think you've got to bring in the private sector, and TEFTA and others are doing it to see how they can have a much greater balance between demand and supply. So the skilled people you produce also find immediate employment.
It was during your time period that the World Bank brought up Pakistan at 100 report. So what are the learning outcomes of that research?
So we did Pakistan at 100, just to go back to earlier question as to what were my first impressions, and we spoke about it.
Was it your idea that you should bring?
It was an idea that sort of came from my team, and we had these debates and discussion as to what we need to do. We said, okay, let's take a long-term horizon, and for us, looking at Pakistan in 2047, when the country turns a century, is a nice way to see what kind of upper middle-income country would it be if it takes the right kind of reforms, or would it continue as it is business as usual, as it has been doing the last 30 years, and therefore a generation and a half have lost out or will lose out. So into the future, when you kind of say you want to become an upper middle income country, then you have to see how many other countries within a generation have really gone from where they were to an upper middle income country.
And there are
Korea, China, Vietnam, Malaysia. So here are good examples. These countries have been in a span of 18 to 30 years, have really moved up.
So what have they done?
So they kind of they basically had the right economic policy. They took all the tough, difficult, politically difficult structural reforms years back. They invested extensively in human capital investment, the public and private investments went up. They cut the red tape. Made it very attractive for private sector to come. And more importantly, I think there was broad political consensus that, nothing should disrupt the economic growth or the inclusive and sustainable path of how people can benefit from stronger economic outcomes.
So, Mr. Illangovan, Pakistani economy is troubled at the moment. The trouble started around 2017. So many people wonder that what could the government have done differently in the last 2 years, this government is only 2 years, that could have produced different results?
No, I think, everybody looks for instantaneous success, and they look for that silver bullet. When you are trying to turn around an economy, it is a slow process. People have to be patient. You've seen countries that have gone through years in many situations that have faced serious economic crisis, but they all sort of took time. There was patience and perseverance. There was political consensus. There were the right kind of people who were brought in to run the economy. They stayed the course. And I think you need at least 5 to 10 years.
5 to 10 years?
Yes. If you're really going to get to what I call that 7-8% growth rate one is looking
But
for.
still, in terms of the kind of difficulties, my last question to you is that what should this government do, which only has 3 more years before the election?
I think this government has been taken on some tough issues. For example, they're doing their best on the revenue mobilization on FPR tax reforms. Last year, they kind of achieved a higher level target. They were 25% higher than the previous year. Then on the power sector, they're looking at tackling the core issues, which is the generation cost is high. Subsidies are misdirected. They need to be better targeted. There has to be better collection. The distribution companies have to become more efficient, either through corporatization and then privatization. So you can see that happening. Third, they have expansion on the safety net program to protect the poor and vulnerable. So I can see this government building on the reform efforts from the past and trying to see how much they can fast track. But as I said, reforms are not easy. They take time, and that requires strong political ownership and commitment, and that needs to be sustained and continued.
Thank you, Mr. Illangovan. We wish you all the best in your career in Washington.
Thank you. Thank you, Mohit, for this opportunity to have this dialogue and conversation with you.